Today we are going to go over a strategy that I have used to get some of my largest percent gains ever. It is very easy to use, but with all trading it does carry risk, but when managed correctly, this can be a great tool to find option trades that gain 500% or more. We'll take a quick look at the steps, then I'll explain them in detail and add tips that I've learned after using this for years, and then we will go through an example. So here's our overview. We want a stock that is ready to move. Sideways trading is the last thing we want here, and we want our contracts to be cheap. We want to take profits intraday, creating a risk-free trade, and then swing that risk-free trade knowing that the contracts carry zero risk. Sound simple enough? Well, there are some ways to make sure it works more often, and I will share those as we go through it. Reminder, there is a link in the description of this video for trade alerts where I post trades like this almost every single day. Read through that link to learn more. The first thing we need to do is obviously find a trade, and ideally something with a pending catalyst of some sort. Events I frequently use include earnings reports. Those are pretty straightforward. Investor calls and economic data. Economic data could be anything like a Fed meeting, a highly anticipated jobs report, inflation numbers, or a change in interest rates. Government intervention would be anything along the lines of a stimulus or the passing of new laws, such as the legalization of a certain product by a state. And tip number one, you want these contracts to have some time on them. That does not mean buy leaps or even something with a couple months on it. Typically, if I'm buying on a Wednesday, my expiration will be something like that following Friday. And obviously, if you're waiting on pending news, be sure your expiration is after that news. So how do we buy into the trade? First off, we probably want a decent amount of contracts. It doesn't have to be ridiculous, but I'd say at minimum have at least 3 because we're planning on selling most of them intraday. They also need to have tight spreads. We do not want a trade that's opening 10% down because we paid the ask on a low volume deal. Good things to look for are high relative options volume, or just look at trading blue chip companies that inherently have more volume and tighter spreads. Taking profits is the key to this entire strategy, and I'm sorry, but I had to add this part in. Do not get stuck in your trade, guys. You and I both know when a trade is getting out of hand. Take the loss, find a new position, and try again if it's not working. But when it does work and you're taking profits, use whatever indicators or price action that you would use in a normal day trade. Have a plan, stick to it, fall back on all the other trading knowledge you've been using in the past. It still works in this scenario. Then we're going to sell some or most of this trade for a profit, but we're not just going to sell any amount. What we want to do is sell enough to cover the cost of what is remaining. So if you had 8 contracts and you sell 4, the profits from those 4 contracts should cover the cost of the remaining 4. In that hypothetical, you'd need the trade to be up 100% to fully cover the cost of the remaining 4. Then we're just going to swing them. We paid for them with the profits. They're risk-free now, and even if they go to 0, we can't lose a single penny on this trade. Let's take a look at an example of using this strategy correctly. We are going to buy calls on a company called XYZ because they have earnings next week. We bought 10 contracts for $20 a piece, making our total position worth $200. Stock XYZ then gets some momentum because our day trading strategy was correct and the price increased 2% intraday. Because of that move, the contracts went up 25%, making each of them worth $25 for a total position value of $250. We are now going to sell 8 out of 10 of those contracts, and you may be asking, why 8? Well, they're worth $25 a piece, and we paid $200 for the whole trade. We want to get all of our money back from the entry, so we sell 8, get the $200 back, and now we've paid for the 2 contracts that we have remaining. At this point, there is 0 risk associated with this trade, so we can be as aggressive with it as we choose to, and if the earnings completely bombs, then we can't lose a single dollar. The most we can lose is $50, and that $50 is entirely the profits we made from selling those 8 contracts for the 25% gain. None of our entry cost can be lost anymore. I use this strategy every single week at least once, and those trades can really pick up some big numbers. If you want to get those trade alerts live every day, check out the link in the description for the trade alerts and start your free trial today. Other than that, like the video if you found it helpful, and subscribe to the channel for more trading content.